Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Argentina is looking for ways to ensure ample domestic wheat supplies without resorting to shutting down exports, a top official said on Wednesday, as farmers fretted about possible state intervention in the markets. The government, worried about food price inflation, recently tried to limit corn exports, but the idea was beaten back by growers. Now the focus is on wheat, with rumors swirling around the Pampas grains belt that export limits might be on the way. Argentina is the world's number 7 wheat supplier.
Anglo American has trimmed its production guidance for diamonds in 2021 owing to ongoing operational challenges, it said on Thursday, adding that demand remains healthy. The company's De Beers business is now expected to produce between 32 million and 34 million carats compared with a previous target of 33 million to 35 million carats. Output in the fourth quarter slipped 14%. For 2020 production was down 18% year-on-year at 25.1 million carats. The miner lowered its output in response to the COVID-19 pandemic, which disrupted the global supply chain and forced De Beers into restructuring its business.
Moving on to the top news in the energy sector.
U.S. crude oil stockpiles fell by nearly 10 million barrels last week to their lowest since March, the Energy Information Administration said on Wednesday. The unexpected 9.9 million barrel fall, the biggest draw since July, reduced crude inventories to 476.7 million barrels, according to AIA figures. Analysts' expectations in a Reuters poll were for a 430,000 barrel rise. The decline was the result of a sharp fall-off in imports and a 2.3 million barrel drawdown in stocks at the Cushing, Oklahoma, delivery hub for crude futures. Net U.S. crude imports fell by 2.1 million barrels per day, the AIA said.
Shrinking import volumes dragged down Singapore residual fuel oil inventories by 6% to a 5-week low in the week ended January 27, official data showed on Thursday. Onshore fuel oil stocks fell by 1.208 million barrels, or about 190,000 tons, to 20.791 million barrels, or 3.274 million tons, Enterprise Singapore data showed. The stock draw marked 3 straight weeks of inventory declines at the fuel oil storage and trading hub. Residual fuel stocks were down 12% from a year earlier for the widest year-on-year deficit since March 2019. Next, we have the top news in metal markets. Gold eased on Thursday as investors opted for the relative shelter of the U.S. dollar from waning risk on sentiment and after the U.S. Federal Reserve expressed worries over the slow pace of economic recovery. Spot gold was down 0.2% at $1,840 an ounce by 12:58 GMT. Prices had fallen to their lowest since January 18 at $1,830.80 on Wednesday. U.S. gold futures shed 0.3% to $1,838.60. The Fed said the pace of the recovery in U.S. economic activity and employment had moderated in recent months, but kept its key interest rates and monthly bond purchases unchanged.
South Africa's Kumba iron ore expects annual earnings to rise by as much as 44%, boosted by strong iron ore prices and a weaker rand to dollar exchange rate, it said on Thursday. Headline earnings per share, HEPS, for 2020 are expected to come in at between 68.07 Rand and 73.06 Rand, up 34 to 44% from the previous year. HEPS is the main profit measure used in South Africa. The miner said output in 2020 fell 13% to 37 million tons while sales declined 5% to 39.7 million tons.
We will now look at the top news in the agricultural sector.
India is likely to announce a 5-year plan to cut expensive vegetable oil imports worth $10 billion a year in next week's federal budget by providing farmers with financial incentives to switch to oilseeds from grains, said 3 senior government officials. Higher oilseed production in India, the world's biggest buyer of cooking oils, will cut palm oil imports from Malaysia and Indonesia and trim soy oil and sunflower oil purchases from Brazil, Argentina, Russia and Ukraine. The officials, who asked not to be named as the discussions are still private, said the plan could dramatically cut India's import bills. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.